Hi guys! Welcome to this week's live Q&A, our version of the weekly Realty. I have, as promised, my friend Haley here, and she is with Cross Country Mortgage.
Hello.
And we're gonna answer your questions here, so we can just kind of jump right into it.
Okay, works for me.
We are also having a couple cocktails because it's Wednesday and it's, 5 o'clock somewhere. So.
It's definitely 5 o'clock and it's hump day, so it's totally fine.
Yeah. Okay, so we will start with one of the first questions that I got was how to determine pretty much your preferred month mortgage payment. So let's say for example you are approved for more than you want to spend. How would you determine like where you should kind of be? Like if somebody only wants to spend a certain amount of money per month, how would you determine that?
Okay, so that's a very fair question. So any single time I talk to a buyer when I'm doing a mortgage application, I like to, the first two questions I'm always asking, what do you want to get pre-approved up to, and what is your comfortable monthly payment? I would say, unfortunately, at least 50, if not 60% of the time, people think that they want to get approved up to so much, and then the payment doesn't match the purchase price that they want to go for. So it's a matter of just understanding like how much you should be going up to in terms of a house payment and in terms of like what purchase price you want to go for. So let's just say, you think you want to get approved up to $200,000 and then you say that you only want a $600 mortgage payment. It unfortunately doesn't work out that way. And that's just because you have to take into consideration principal, interest, taxes, and insurance. Because most people like to escrow. Unless you want to pay taxes and insurance by yourself, then it could be a little bit different. But I would say just from my experience actually speaking with people and understanding their needs and understanding where they feel comfortable is how we determine what the mortgage payment is. It's a lot more than just, this is the answer. Like we have to talk about it and understand exactly where you're going to feel comfortable.
Okay. So what all gets factored into your monthly mortgage payment?
Well, like I just said, your principal is going to be the loan amount that you take out. So let's say that you have a $200,000 purchase price and you want to put $50,000 down, then that means you're going to have a $150,000 loan amount. So that's how much you're taking out for the mortgage. That's what your principal is going to be. So that's broken down over, most people are getting a 30-year mortgage, then you're going to have 30 years to pay off that $150,000 loan amount. That's your principal. Your interest rate, obviously everybody knows about interest rates. You want to have it as low as possible, but sometimes we realize that the lowest possible interest rate is not always going to be the best one, and we can get into that for sure. And then taxes and insurance. So depending on what property you choose, your taxes are going to be different based on the county, based on the city, just any special assessments that are included. And, homeowners insurance is pretty easy too because you have to be protected, right? The lender wants you to be protected. You want to be protected as a home buyer. So you want to make sure that you have insurance covering your property.
Okay. So that is something that I get asked about by almost every single client of mine is like how much would my mortgage payment be if I spent this much on my purchase price, and all of that goes into it. So I can't ever answer anyone straightforward, so that is a great question.
And it's hard for a lender to even answer that straightforward because it depends on the situation. Every single property is going to be different. Every single person is going to be different. It really, really depends.
Yeah.
It's never going to be a straightforward answer. And I know that people hate to hear that, but it's so true.
There's a lot that goes into it.
There's a lot that goes into it. But, if someone's just telling you that it's A and B, and those are your only options, they're not a good lender for you. because they're not actually caring about your interests. They're
Yes.
they're just spitballing what they know from reading something online, basically.
Right. Okay, that kind of takes me into another one of my questions is why would you say it is so much more important to work with a local lender as opposed to a big bank?
Okay, I'm actually a perfect advocate for this question, and I'm sure Tiffany knows this because I worked at Quicken Loans. Now, I'm not going to sit here and bash another lender. I'm just not going to do it. But I will tell you this. Someone that is working at a corporate office across the country versus someone that is literally working down the street from where you're trying to purchase a house, you already know that it's going to be so much of a different experience because for one thing, if I'm working down the street, you can come meet me in person. We can talk about whatever you want to talk about. I probably also know the area because I'm local. I understand how the real estate works in the area. I understand how the market works. I understand everything about the area. I probably already have a good idea of what your taxes are going to be. I'm not just blindly researching things and hoping that I'm correct. And unfortunately, with big banks, it's always just a numbers game. There's going to be a difference between the quantity and quality aspect. So a local lender, of course, everybody cares about the quantity, but we are always focused on the quality. And especially at Cross Country Mortgage specifically, I know that my branch is one of the top 10 branches in the whole country with the numbers that we put up, with the quality that we provide, the customer service that we provide. I mean, we get told almost on a daily basis, the amount of customer service that we can offer people is just, it's next to none. And working with a big bank, you're just not going to have that same experience. I mean, I know personally, you will talk to, I know you've had this experience too. If you're going through the process with a big bank lender, especially if you do it online and you're talking to somebody for like an hour over the phone, like a Quicken Loans or, a Wells Fargo or something like that, there's gonna be like 20 to 25 different people that you talk to throughout the process, and it's insane. And I know you've had this experience as well. You literally were trying to get in contact with the loan officer at a big bank, and you couldn't even get a hold of them.
Yes, it's so important because it can really affect your deal. It can affect your timelines and hitting deadlines. Like that closing date can be super important, and you need someone who's on your side who is going to be working towards hitting that deadline and not just kind of saying, whatever to it. So
and 100% to what you just said, like we are focused on making sure your deal closes and closes on time. Like a local lender is going to be that person that is so focused on making sure that the deal is held on, walked on a red carpet, held on a silver platter. Like we care so much about making sure that the deal goes as flawlessly as it can, as opposed to a big bank in California, Arizona, Washington, Detroit, Minnesota. I don't care where the office is. You just don't know what you're getting when you're working with somebody that's not local. And I can tell you right now, and I'm sure you've had this experience as a real estate agent, when you have a Quicken Loans type pre-approval versus a local lender's pre-approval, you have such a competitive advantage with that local lender approval than you will with a big bank. Because there's going to be listing agents that look at that deal or sellers that look at that offer that you're making, and they're going to go, yeah, no, we trust the local lender because they actually looked at your credit. They actually looked at your scores. They actually calculated your income and make sure that it works. And they understand who you are as a buyer, as opposed to a big bank that it's a numbers game. How many loans can we get into the pipeline? How much money can we make?
Right, and that's so important in this market that we're in. To touch on that, you guys, I had somebody from a big bank literally say to me one time when they were trying to push our closing date back for no real reason. They literally said to me that a closing date is kind of like when you order a pizza, when they tell you that it'll be there in 30 minutes. It's like it's roughly 30 minutes. So like that's like the same as like you guys.
Oh, that's fantastic.
No. It doesn't work like that.
I don't think I would ever say that, even if I was
well.
working at a big bank still.
Like what?
I don't think I couldn't do that. And that's just embarrassing.
No.
Also, why would you compare it to pizza? There's pizza.
It's just people's livelihoods and where they're living.
Literally, it's people's whole financial livelihood and pizza. You can't compare the two. It's not even a fair comparison.
Yeah, I was literally like, what?
Oh, that's great.
So, okay. Another commonly asked question that I get is, how soon should someone contact their mortgage lender? Like, if they're not necessarily ready yet, should they reach out? Like, when would be a good time?
As soon as you are thinking about it. I think as soon as you think you are potentially ready to maybe look for a house. Even if you don't have a real estate agent, that's fine. We local lenders can recommend real estate agents. I would recommend Tiffany all day. I know how amazing she is with her clients. I have people that have reached out to me multiple times in this last year that are like, I've never talked to a real estate agent. I have no idea what I'm looking for. I just want to see if I'm even approved. Mm-hmm. Those are the absolute most amazing people, in my opinion, because they already know that they need to make sure that they get approved for a mortgage before they move forward. Yeah. So honestly, there is no right time, but there is a wrong time. And you do, like, in my opinion, you shouldn't be making an offer without having a pre-approval, because
you can't.
Exactly. Like, you probably can't, and if you're waiting until the very last minute, it's usually really hard to get that pre-approval exactly when you want it.
Yeah, you're gonna miss out on your house.
Yeah. And, you know, at least for me personally and the team that I work on at Cross Country, like, we will absolutely get you that pre-approval as soon as you need it. If it's the very last second, it's going to be hard, but we can do it. We can always, you know, get everything done that we need to get done. I would just say, be prepared. Make sure that when you are looking for a house, or you're thinking about looking for a house, even if you don't think you're going to get qualified, reach out. We can do a mortgage application. We can run your credit. And if it doesn't work out, we will get you to the place where it will work out in the future. Yes. Even if it's like 6 months, a year from now, you have no idea. Let's see where you're at. Yeah. And we're going to be the, you know, at least for me personally and my team and the branch that I work at, like, we're going to make sure that we get you all the right resources to make sure you get approved in the future. And then you're going to get a house.
Yeah. Get a game plan going.
Yes.
Set yourself up for success.
Mm-hmm. So. Absolutely.
Okay. All right. I think everybody probably knows the answer to this, but where are the rates at today, and do you see them changing anytime soon?
I'll answer the second question first. Rates are going to change for sure. If everyone is aware of what's going on in America this week, it's always going to change. So just like when COVID happened, just like when any type of big, unfortunately, if some type of political event happens, or if some type of economical event happens, rates always change, right? So it's always going to bounce back and forth. Rates are still low. I'm not going to lie. They are still low. But what people really don't understand about interest rates, unfortunately, is that you will have to qualify for a certain interest rate. So, you know, you might hear about somebody that gets a 2.125 interest rate, but does that mean that everybody can get that? Unfortunately, they can't. It's not always going to be offered to them. And the reason why that is the case is because there's a lot of things that go into factor with an interest rate. Your credit score, your credit history, you know, your income, how much money you're putting down. All of those different things play a huge factor in interest rates. And of course, the market at the time that we're trying to lock in your interest rate is going to play a huge factor. And that's another thing too, is a lot of people don't understand that you have to lock in interest rates when you are buying a house or when you're refinancing. And locking in an interest rate only lasts for so long. So when you lock in an interest rate, you have a couple different options. And usually your loan officer is very good at determining how long it should be locked in for. But there are 15-day locks, there are 30-day locks, there's 45-day locks, and there's 60-day locks. Depending on where your closing date is, we're pretty good at knowing how long we should be locking interest rates for. But there's always the chance that, for some reason you have to go past your closing date in order to get into the house, and we only locked your interest rate for so long because we had one anticipation to meet the contract date. Some unfortunate circumstance happens. So it comes to a point where we have to do what's called a rate lock extension. And that makes people mad sometimes because they don't think that they have to extend their interest rate lock, but it happens, and trust me, you would rather extend your interest rate than to let it expire.
Yeah.
Because
especially if you're under contract and stuff.
If you're under contract, you want to make sure that your interest rate still keeps going. I'm not going to get into all the guidelines and the rules behind it, but if you let that interest rate expire, it's no bueno.
For sure.
Yes.
Okay, let's see.
I'm almost done.
A couple more questions. I know, right? It's okay. It's not embarrassing. It's Wednesday and we work in real estate.
Yeah, exactly.
Okay, so, all right. I get asked a lot about, I work with first-time homebuyers a lot. I don't know why my screen keeps going dark.
Hi, we're still here.
But I work with first-time homebuyers a lot. So they always ask me about first-time homebuyer programs and how they would qualify for them. So what would you say to that?
Okay. First-time homebuyer programs, it's a little bit different, especially when it comes to if you can get qualified for a conventional loan. There's a couple different programs that we can use called Home Ready and Home Possible. So Home Ready is specifically for the investor Fannie Mae, and Home Possible is for the investor Freddie Mac. So one thing that we can do to look at to see if you would actually qualify for it, it's usually based on your income. So as long as your credit score meets the minimums that are required for the program, if your income is a certain, it's like there's a certain limit with your income in the area that you're trying to buy a house. So let's just say you're trying to buy a house in Cleveland, and we get really specific in which area you're trying to buy a house in Cleveland. We look at a tool that'll let us know exactly if your income is going to be in the area median income, like the target range for it. And as long as your income meets those guidelines, then you would qualify for a program like that, which is really awesome because there's a couple different things that come with that. You can get away with only putting 3% down on a loan, which is amazing because, there's a lot of people that don't have the money for the down payment. So that really helps to move it because the minimum down payment for a conventional loan typically is 5%. So if you can go from 5% to 3%, makes a huge difference.
Big difference.
It makes such a big difference. Even if it's $700, that's $700 more that you would have towards closing costs or towards, investing in your house. It's always such a good thing to look into something like that and to ask your lender about it. If you don't understand, if you could even be qualified for it, ask them if it's an option, And then another thing too, if you don't put at least 20% down on a conventional mortgage, then you have to pay mortgage insurance, which is not a big deal. A lot of people have to do it. It's usually, it falls off after a certain amount of time, so it's not a big deal. But with a lender, it is a liability to not have mortgage insurance if you're not putting at least 20% down. But the stipulation with that is at least you can put less money down. It's totally legal. It's totally fine. We're in a different day and age now, so we can have less money down on a house. But if you do Home Ready or Home Possible, you can actually get away with a lower mortgage insurance payment. So like I said, I don't have to get into all the background about it, but you could be paying $100 for mortgage insurance. If you get qualified for a Home Ready or a Home Possible program, you might only have to pay $50. So that also makes a huge difference.
That does.
Yeah, it helps you save on your monthly payment. So it's an amazing opportunity that I would definitely look into to see if you can get qualified for.
Yeah, great programs. Okay. Do you have any frequently asked questions that you would like to address? I mean, I think we've covered most everything. I wrote down payment assistance, but
well, I can touch on down payment assistance.
Okay.
Unfortunately, right now with it being COVID, there isn't as many options.
Yeah.
The Ohio Financing Agency offers a lot of great down payment assistance programs, but it's just been really iffy right now with COVID.
Yeah.
There is one program that is still able to be used, and it's called Communities First. It's specific in Ohio, so I don't know what other states do in terms of this, but it's basically like a grant that you can get qualified for. Kind of the same thing as like a first-time homebuyer program. It can be conventional or it could be FHA, as long as you have a certain credit score and your income meets certain qualifications, then you are able to potentially qualify for this grant. Now, it's not like a silent second mortgage. It's literally just a really awesome program that can offer you money towards paying for your down payment. It's not something that we use too often because it does come with a lot of different stipulations, but it is something that is very, very useful in times where people don't have any other options. But you can get qualified for it. It's something that you can always ask for as well. If you don't have, because as a lender, you have so many different options to get like down payment assistance. You can ask your family for money, like gift funds.
Yeah.
Gift funds are amazing and they're very, very easy to get approved. So if you have family or, an extended family member or, a husband or a fiance or something like that, there's different guidelines we have to play by, but you can always see if you can get money from, close people in your life as opposed to necessarily going down that route with Communities First. It is always an option though, so something that we can definitely look into. I always just get really weary about it because unfortunately it's COVID.
Yeah, well, yeah. Hopefully we're done with all this soon.
I'm not gonna hold my breath, unfortunately.
Right.
I was gonna say, frequently asked questions that I hear or that I even see. The biggest one is, do I need to put 20% down to get approved for a mortgage?
I hear that all the time.
All the time, which I didn't realize that we were still in 1985. Because I feel like that was something that was in the mortgage market back then.
It is so rare I have somebody put 20% down.
It just depends, honestly.
Yeah.
It is very rare because there's so many options with putting less money than 20% down. I mean, first of all, 2008 happened, which changed the whole entire mortgage and real estate industry for forever. But we allow so many different things now. So if you can get qualified for a first-time home buyer program, you can put 3% down if you're qualified conventional. If you do FHA, you can go as little as 3.5% down. And then depending if you are a qualified veteran, you can get 100% financing. So you don't even have to put any money down.
Yes.
Mm-hmm. And then USDA is kind of the same way, just depending on the circumstances and what you can get qualified for, you can also get 100% financing on USDA. And of course, that's very subject to the area that you are intending to move in. If USDA would finance the house, then you can also get away with no down payment. So it's pretty cool.
Amazing.
Mm-hmm. It's absolutely amazing. So
yeah,
it's incredibly small-minded for people to still tell individuals today that you can only put 20% down to get approved. I mean, my mom, oh my gosh, it was a couple weeks ago, Christmas, I don't know which one, but she was saying like, oh yeah, isn't FHA only for first-time home buyers? And oh, don't you still have to have 20% equity to even get approved? No! There's so many options out there. You don't have to be FHA for a first-time home buyer. You don't have to put 20% down. We can get you approved with less than those things.
Yeah.
I promise you.
Yeah.
I can't promise you everything, but like I can promise that we can try our best to get you approved with, lower amounts for a down payment and we don't have to go FHA. We just have to check and see what's going to work best for you.
Yeah. What works best for you.
Mhm.
That is the most important thing.
Yeah, I was gonna say there's another thing I definitely want to touch on really quick because
Yes,
I'm just kind of
please
rambling and
do it.
having a drink, and let's just keep talking about it. So, there's gonna be times when you talk to your lender, and hopefully a local lender, and they're going to tell you, you know, you could qualify for both conventional and FHA.
Yes.
But let's just say that they tell you that FHA is going to be the better route. I know there's a lot of stigmas around FHA. Don't let that discourage you, because there is a chance that your FHA interest rate is going to be better. You're going to be qualified for, you know, doing 3.5% down versus 5% down. Let's just say you're not a first-time home buyer.
Mm-hmm.
And you're going to be able to pay less money up front than you would with conventional, just in terms of down payment and closing costs.
Yeah.
So don't get discouraged by the name of the program. Just let it roll. Just see what is going to work best for you and trust who you're working with. That's like the biggest thing that I can say. If you are investing in a real estate agent and you're investing in a lender, trust them. They know what they're talking about. And if they don't, and you find out they don't, then tell them to skedaddle.
More so than your family and friends who
Yes.
have read articles and watched HGTV.
Yeah, HD. Oh.
And I spilled my drink.
It's all good.
It's fine.
I was gonna say, I love HGTV. I'm sure Tiffany loves it too. But
I only had one drink, you guys, I swear.
just one, we promise. It's
Go on.
it's not, you know, HGTV is beautiful to look at the houses, but don't trust anything that you see in terms of qualifications on there, because someone that is a dog walker 3 hours a week and has a $1.4 million budget, I don't know what they're doing, but they probably are paying cash on hand for their house.
At least.
That would be my guess.
They're like, we need a $2 million house with all of the bells and whistles. My husband sharpens pencils for a living, and I am a stay-at-home grandmother. Like, oh.
Oh, yeah. My budget is $3.5 million.
I could definitely qualify then.
Well, it's like, what? Those are just outrageous situations that we do not want to rely on at all. So let's talk to qualified professionals locally who are trusted and come highly recommended, and that we know are giving you the real tea, okay?
Or the loan down.
Or the loan down, exactly. You don't want people that are just pushing your buttons and telling you what you want to hear, because sometimes, unfortunately, you need to hear something different.
Right.
It comes down to that. Like, I'm not going to be that person that just tells you something that you want to hear just because it's going to make you happy and make you use me as a lender.
Right.
Because there's the chance that I tell you the truth and you're just not going to be happy about it. And that's okay with me, because I feel so much better about telling the truth and telling you exactly what needs to be heard, as opposed to like just a farce that's never gonna come true.
Yeah. Who has your best interest
Mm-hmm.
at heart?
Exactly.
So, tell people where they can find you.
So you can find me on Instagram. My what is it called? Your handle? Yeah. I was like, is that like Twitter or whatever? I don't know. My handle is @Hayo. It's HA 4 Y's 2 O's. And then if you ever have any interest in talking about getting pre-approved or anything like that, my email is haley.huber@myccmortgage.com. I'll have Tiffany spell it out, because I'm sure no one's going to spell it right. It's okay. I accept it.
Okay. Well, thank you for doing this.
Of course.
Cheers to
empty drinks, spilled
We need
drinks,
another
and
one. We're a mess.
the loan down.
All right. Thanks, guys. We'll talk to you soon.
Bye.